Today, October 17th, Tuesday, we're going to be checking out the European Open in foreign exchange and maybe a couple of assets. Today's day will be, certainly the morning, is going to revolve around the UK. We have Carney speaking 9:15 Central European Time, and then of course we have UK CPI at 10:30 Central European Time, 9:30 London. Both of these will be incredibly important to the direction of sterling. Let's have a look at the charts real quick and see if we can pick out some levels that might be of interest. Yesterday we had some Brexit news which forced the pound lower. We printed twice these lows, 148.19, 148.16 in sterling yen. As I mentioned yesterday, I quite like this sort of 146.95, 147.05 level. After yesterday's low, kind of jammed low down there. This looks even better. If we get down through this, plenty of fresh air, plenty of space for a bigger long-term move. This will, of course, be sort of binary depending on what Carney says and what CPI is. But if we get a low CPI, certainly that will be a surprise, and the pound will get crushed. Euro sterling, not quite as clear where to go on this. Charts are kind of in the middle of nowhere. Yesterday's high 89.22, yesterday's low 88.58. Neither of too much interest for me. And sterling dollar, top side 133.41, 90 points away. On a day like today, you can definitely see these kind of moves. But again, with the backdrop of all this negative Brexit news, front page of the FT is talking about home prices in London falling. Front page of Bloomberg has May and Juncker meeting a disaster. I think you're going to get a better bite out of the apple downside in sterling today, especially if CPI comes in a little bit weak. Other pairs that are of interest, euro dollar continues to kind of ease slowly lower. The big level is 116.68. As you can see, longer term, people are going to view this as some sort of longer term head and shoulders if we get down there this week. Very important level there. Dollar Swiss clawing its way back higher. Makes sense on a global macro kind of, Swiss rates are negative, US rates are moving higher. We're very familiar with the 97.70 level, which we just pierced here. Very difficult to trade this pair. The next big point is top side, 98.37. Of course, the 200-day now is getting closer and closer, 98.18. So keep an eye on that 200-day. As you can see, sometimes when Swiss crosses the 200-day, it really crosses it with vigor. So we're always got our eye on the 200-day in dollar Swiss. Dollar CAD, higher yesterday on the NAFTA stuff, negative NAFTA stuff. Not really great levels. Kind of a death knock on that trend line, but 125.60 high yesterday. There'll probably be a point today if we continue down that road. Dollar Max also continues to shoot higher, taking more of the NAFTA negativity brunt than CAD. But nothing great. We got all of these highs up here in 1929, but not really much interest there. Finally, gold lower yesterday as the 10-year yield went up. Almost bearish engulfing. Let's keep an eye on that. Price down through 1290 will confirm that sort of bearish bias. And dollar yen looked bearish early yesterday, but then retraced and now is in the middle of nowhere. Important levels on the downside, 111.50. Important levels on the upside, really just sort of 114.50. So not much to do in dollar yen. S&Ps, real quick, did really nothing as always. Printed a new high, 57.75 in the D's. Closed at 55.50. So marginally bullish, but again, very low vol. No point in trading S&Ps at this time. Good luck to you out there. Have a good day. Ciao.